What's up everybody, Tom here with another video. Today we'll be talking about the latest stock market news along with our technical analysis thoughts on the S&P 500, Nasdaq, volatility index and Apple after the news yesterday. We're about to see the Federal Reserve come out with their statement, and of course the market is looking bullish in structure. The question is, are we seeing another buy the rumor, sell the fact like previous times? Let's take a look together. Stay tuned. So as many long-time listeners will know, one of the big keys of this channel is to try and take the complicated out of the stock market and simplify it together. One of the ways we can do that is always looking at what happened yesterday and understanding what's happening in the markets right now. So ahead of a FOMC statement, we're always going to see pressure put on the banks, as the banking sector is of course incredibly susceptible to what the Federal Reserve has to say. We saw JP Morgan move down 3% and they obviously came out with a statement, as well as Bank of America went down and other banks and regional areas went down overall. Overall, it was a relatively bullish day in terms of the tech stocks. However, Apple lagged, and that was a clear case of buy the rumor, sell the fact ahead of their announcement. Now, did they announce new iPhones? No, they announced obviously their new Apple Watch, but it was not filled with as many products as people expected. And that could be due to also this current crisis that we're in and them just not being able to get them ready in the supply chains ahead of the event. I'm not going to speculate on that too much, but it is interesting to see this buy the rumor, sell the fact sentiment coming into several stocks recently. And we'll be talking about that throughout this video, along with, of course, what's going on in the technical analysis world on these indices. So why are we all here? Well, of course, Wednesday, September 16th in America is going to be the Federal Reserve meeting announcement. And we have the chair, Jerome Powell, the printing press himself, hopefully warming up those printers if you're a bull, to try and, of course, stabilize markets after this recent dip or correction. We're seeing a bit of an increase in volume as people in the stock market, of course, are trying to get their positions placed before the event. And it's one of these times where you either make one of two decisions. You either buy the dip before an event and believe in the Fed to come out with the right things, or you wait and see approach and of course then look for confirmation after the news. So of course the volume yesterday was slightly up on the last couple of days of trade. What about the volatility index? What about the VIX? Well, we expect this probably to spike ahead of the news tomorrow. And of course it did go up after hours a little bit there at the end of the day with the VIX. The VIX did trade slightly higher after going down sharply, and it is now under both of these moving averages. So we would have really liked to hold 26 to 28 zone that we talked about in our weekly analysis for the VIX. And at this stage, it's just continuing its decline. Now, it's generally been doing this. It's generally been declining after, of course, its initial spike, and then having kind of like a second spike up through it, usually throughout the thing. So actually what's happening right now is pretty normal. Selling off, went down, spiked up for 2 or 3 days, and then went down again. We may see the same thing happening into this event. We do expect volatility to rise ahead of the FOMC. What's our lead indicator of the economy telling us? Well, copper is topping out at this stage. We've got the 3.08 holding resistance, and of course we have a bit of a sell down. There's nothing to be concerned about here. We've still marked out this 2.955 as the key support. And unless we're underneath that zone, we don't think that there's going to be very big corrective moves in the market. Now, if you don't know why copper is so important, definitely search it up on the internet. We'll be making a video about it on this channel as well very soon. So make sure you subscribe and of course hit that alert button if you're interested in knowing more about why copper and other things can be used as leads in the market. What about the dollar index? Incredibly susceptible to the Fed. So interestingly, after bearish movement yesterday, we had a bullish hammer, and we're now seeing a new high actually forming here on the US dollar index on the right hand side. In fact, it just made a slightly new high, and we've talked about this quite a lot on the channel. 93.80 to 94 is clearly resistance for this, and we're right in the middle right now. So if we see a big bullish day ahead of the Fed, it could be all the way up here very, very quickly. Obviously, it's decision time for the US dollar. Will it go down? If it gets through these wicks, we'd expect all the way down to the 92 zone. And that's because when you break through bullish wicks like this, like bullish pin bars or hammers, usually the net effect is very negative. Look over here. Here is a bullish hammer. Here is when it breaks through. Look at the negative effect that happens after that. That's one of the tips that we talk about a lot on this channel, and it's something that you should definitely look at. On the left-hand side over here, we have gold. So it spiked. And then, of course, with US dollar strength coming back into the market, gold versus the US dollar weakened. So we do expect incredible volatility on things like gold, things like silver, all of these types of things. Also, potentially on Bitcoin as well, which has had some great structure on it and a great breakout, almost hitting 11K over the last 24 hours. Now, let's just quickly talk a little bit about buy the rumor, sell the fact events. Now, obviously, Apple had a big move up in the market ahead of course, all of this news. And on top of that, just the anticipation from also retail traders. Now, we've seen Apple being stuck between the 20 moving average here and the 50 moving average here, and it's still stuck between that zone. Let's jump into the smaller time frames though, and just talk about this 2-hour time frame and just talk about what happened here. So we hit basically a point where we had moving averages, the 200 and the 50. This was ahead of the news event. Then the news event came out and severely disappointed stockholders, and of course the market went down and is now finding support kind of on the previous 115 level. Now, what this shows us is that there's been a lot of buy the rumor, sell the fact. We saw that in Nikola, if you haven't seen that stock the other day. Nikola went really heavily into the GM news and then of course sold off incredibly heavily. And there are some stocks right now in the market that are sentiment driven, and Apple is certainly one of them. And another one is of course Tesla. We have September 22 being the battery day, and a lot of people are hyped and anticipating this event. So what are we seeing on Tesla overall into this event? Well, Tesla has been acting incredibly bullishly into this event. We're up another 7% yesterday off a gap close. And we know that with Tesla, it moves incredibly quickly into these things. Now, will it hold bullish sentiment into that date? I think it could, and it definitely could even go higher. We've actually had a lot of tests of resistance and a lot of tests of new highs ahead of news events. And I think it's one of those ones where if you want to go through and put the yards in and have a look at every run up into an announcement and then the reaction after the announcement, it'd be worthwhile if you're a Tesla trader. We've certainly seen bullish movement off that previous support structure. We talked about this when we were live. We talked about this 330 being a great dip buy zone. It certainly was when you're talking about a very bullish sentiment driven stock. But at this point, it looks quite bullish, and we would either expect it to go back into the 500s or for it to actually stop right where it is right now. And that's because if you put a fib on this and you consider this a potential blow off from the top, being how big the move was, it's basically hit between the 61.8 fib and the 78.6 fib. And you'll know that if we consider this a blow off, which I'm not sure if I would in this case, because the move was all the way across the market, then this would be the point where you start to see some resistance found on Tesla ahead of that battery news. So again, buy the rumor, sell the fact is definitely a thing in the markets, and you always need to be careful on specific stocks and specific indices. Let's now take a look at the Dow Jones. So we don't always cover the Dow Jones on this channel, but sometimes we do, and I think it's worthwhile considering this level. This 27,360 level, pretty much 27,400 level, was such a key point in the market, and it became that support. More importantly though, like a lot of the other indices, they all hit the 50 moving average. We had the Dow hitting the 50, and you'll see here that the Dow, whenever it hit the 50 previously, was buying support off it. So it made sense that over the last week, it bought that zone. Remember also, previous support, previous resistance, previous support, previous resistance, previous resistance. So whenever you're doing technical analysis on your charts, if it's possible to find those kind of levels, it's really, really key. Again, here on the Dow, we're stuck between the 20 and the 50 right now, and we're awaiting the Fed. A very similar story to what we're seeing on the other indices right now. We go over to the Nasdaq. Now, the Nasdaq is probably my favorite potential double bottom here. So we have, of course, the low formed by another low. We also have, of course, our resistance levels up here, and we're just about to test those resistance levels ahead of the Fed meeting in around this 11,570 area. Now, if we break through there, what does that symbolize? What does that mean? Well, with the double bottom pattern, we're usually going to go the distance of the double bottom. So you would expect the market to go quite bullish, probably based on Fed stimulus, and the market to go back into that kind of 12,200 zone where it'll find some previous support, which could act as resistance. So we've got quite nice bullish on here on the market, on the Nasdaq for the futures. Now the Fed can change this just like this. They can click it off and on depending on what they say in that statement. It is definitely something where they control the markets right now, and we're very well aware of that. Here we've got the 50 EMA, the 200 simple moving average, the green one, and we're actually slightly above price. So think of it this way: if the market moves up, breaks through, comes back down, the previous resistance will act as support. But on top of that, you also have all of these moving averages, the 20, the 50, and the 200, all below this point, literally sitting there acting as dynamic support. So it's a very good zone for traders, and it's a very good zone in general when it comes to potential technical analysis setups. The other thing that can happen is, of course, the Fed come out, it goes up here anticipating the news as per normal, and the Fed disappoint. Now, if the Fed disappoint, we're pretty much going all the way back down to the previous lows, or at least the 11,100 area. We break through that, we've talked about it before, 10.5 becomes open. There are always critical levels that are interesting in the markets, and these are the 3 critical levels that I think are worthwhile putting alerts for and checking out the market if you're a trader, and obviously if you're a dip buyer. Down here was the first entry, like we discussed, and after this close, definitely it's going to have momentum in it, you would think, based on whatever the Fed say. So let's see if we can close above there and potentially see new highs in terms of the Nasdaq. What about the S&P 500 versus the Nasdaq? Well, look at these charts. This is the Nasdaq on the right. This is the S&P 500 on the left. Notice there's something very similar. 20 exponential moving average, which is this red one, and the 50, both literally trapping very similar formations and very similar setups. If we go to the daily here, we can see again, the S&P 500 is testing that resistance ahead of the Fed, as we expect, ahead of the announcement. And we will see usually if it breaks through this zone for it to go the distance. Now we'll take the distance from the low down here because I know the futures will show a slightly better pattern. And again, that basically symbolizes back up to potentially the 3520 zone, at least 3500 zone on the S&P 500. Now we've got a 20 and a 50 exponential moving average. They will act as dynamic support. And again, it's all ahead of the news. So we knew it would either come down to the low or test the high ahead of the news. And I think that's probably one of the most important things to understand about big news events. The market will usually go to a key technical resistance or key technical support ahead of that news. So what do we expect from the FOMC statement and meeting? Well, I think more of the same is to be expected. But in general, we are in an election year. And usually you do not want to see too much instability coming into the election. The Fed will be probably thinking about this, but they're also thinking about what they have to do to protect the economy over the longer term. So the question is, will Jerome bring out the big guns, bring out the printer, or will he just basically stay the course? And will that disappoint the market? Oftentimes we see the market being disappointed very easily by just not getting enough stimulus, especially at these higher levels. So look, it's one of those ones where it's key event risk. It is very difficult to prove each way, and the market structure currently looks bullish and of course awaits that break based on probably the Federal Reserve news. All right, everybody. Well, I'll see you tomorrow for another video recapping that statement, and I hope everyone does as well as they can in the markets tonight/tomorrow. Speak to you soon, and bye for now. See ya.